Assalamualaikum. Today we are going to present topic liquidity ratio of public Islamic bank. I am MUHMMAD SYAFIQ, Bank KHAIRUL AZLAN 244181. The term of liquidity is defined as the ability of a company to meet its financial obligation as they come due. The liquidity ratio then is a computation that is used to measure a company's ability to pay its short-term debts. There are three common calculations that fall under the category of liquidity ratio. The first one is the current ratio, second one is asset ratio, and the third one is the current cash debt coverage ratio. Okay, the current ratio is to indicate a company ability to pay its current liabilities from its current assets, and this ratio is one used to quickly measures the liquidity of a company. Next, the second ratio is the asset ratio. The ratio is referred to it is referred also as a quick ratio. The purpose of the ratio is to measure how well a company can meet its short-term obligation with its most liquid assets. As we all know, the liquid assets is those that can be quickly turned into cash, and most of the current assets are highly liquid with the exception of inventory. Lastly, the current cash debt coverage ratio is a liquidity ratio that measures the relationships between net cash provided by operating activities and the average current liabilities of the company. It indicates the ability to the business to pay its current liabilities from its operation. So today our group going to find the liquidity ratio of public Islamic bank. Okay, so before that, I'm going to talk about the background of public Islamic bank. Public Islamic Bank is started their operation on 1st November of 2008 and wholly subsidiary of Public Bank Berhad. Public Islamic Bank also is generally had started and offered Islamic banking products and services to the customers and public bank through public bank since 1993. In that time, Public Islamic Bank through public bank focusing on consumer and retail financing, small and medium enterprises, financing and deposit taking business. Now, Public Islamic Bank have grown strong and steady, standing on strong capital growth from 30 million in 1993 to 2.6 billion as at 31st December of 2013. It is also offers full Sharia compliant bank solution to Muslim society and all Malaysian citizens. Generally, whether to save or to seek financing with banking products and services provided in order to suit and its life demands. The company is also operates through hire purchase, retail operations, corporate banking, and treasury, and also capital market operation segments. Public Islamic banks also offered savings and current accounts, terms deposits, homes, vehicle, personal, or other financing services for assets and property acquisitions, and working capital financing in foreign currency and microfinancing. Takaful and family care and hospital income products and credit cards. The company also provide hire purchase service for passenger vehicles, mortgage and trade financing service, remittance service, and money market and securities trading service. So I will continue about the board structure and board structure of the Public Islamic Bank. The first 5 members of the board are high caliber and integrity, and they possess the appropriate skills, knowledge, experience, and competencies to address key risks and major issues relating Public Islamic Bank Berhad's business and its policies and strategies. Okay, First person is Tan Sri Datuk Sri Dr. Teh Hong Piao, a non-independent and non-executive chairman of Public Islamic Bank Berhad, which is he is the founder and the chairman of Public Bank. The second person is Datuk Muhammad Najib bin Abdullah, the independent non-executive deputy chairman, who has more than 37 years experience in banking and finance industry. And the third person is Tan Sri Datuk Sri Tai Ahlak, a non-independent, non-executive director, is the managing director or chief executive officer of Public Bank Berhad. The fourth is Datuk Dr. Mahmud Zuhdi bin Haji Abdul Majid, an independent non-executive director. Lastly, Mr. Vazanta Kumar Tarmalingam, who was appointed as an independent non-executive director on 27 September 2016. And there are the Sharia Committee in the Public Islamic Bank Berhad, which is you can search in the Public Islamic Bank Berhad website. They will show you the full Sharia Committee and the boards of Public Islamic Bank Berhad. So the presentation will be continued by my friend. Thank you.
Assalamualaikum warahmatullahi wabarakatuh. My name is MUHMMAD MASTURI 247877. So I'm going to present about the current ratio as our group is representing liquidity ratio. Formula of find current ratio is current asset divided by current liability. As it is shown here, the calculation will be started with the latest one, 2017, and it will be followed by the previous years until 2013. So as I've shown the ratio of each year, this show that in every year they are able to pay every one current liability. This show that how they manage their current asset to cover their short-term liabilities. So there are up and down of the ratio, and the fluctuation of ratio is caused by maybe certain reason, and there's a way that can improvise it. So one of the fastest ways to improvise it is the conversion cycle of debtors or account receivable. The rolling money should be faster from the debtors, and current ratio will be under control of the bank itself. At least if the debtors are liquid, the ratio will show a correct picture. That's all from me.
Assalamualaikum and good afternoon. Okay, now I will present the next ratio, which is the quick test ratio, or the acid ratio. The acid ratio test is provided the most stringent evaluation to the company ability to pay its current liability. Okay, it contain the liquid asset, which is the most liquid asset is cash, and the lowest liquid asset is inventory. Okay, the quick ratio is indicator of the company their short-term liquidity. Okay, I will show you the amount, the data about the company. Okay, for the quick asset ratio, there is a formula, which is the cash and short-term investment and the receivable divided the current liability. Okay, this is the amount of the cash, short-term investment and the receivable, and this is the current liability divided. Okay, I got the 1.0243 for the 2012. 2013 is decreased, and it's also decreased until the 2070. Okay, 2060, and it's increased in the 2070 by 0.8711. Okay, from this data, we can conclude that in Islamic bank in 2012 is a 1.0243, which means there is enough liquid asset to pay to the current liability. Okay, but in the this means that without not most liquidity assets such as stock, they cannot able to finance a short-term liability. But in 2060, there is less than one, which is 0.8360. It means that the liquid asset is less, not enough. So the public Islamic bank must be treated questions. Okay.
Assalamualaikum warahmatullahi taala wabarakatuh. My name is ZULHILMI AZRI and my metric number 247246. And I will talk about the current cash debt coverage ratio. It is an important measure of a firm's short-term liquidity. Why do we need another measure of short-term liquidity while we have things like the current ratio, and then we also have quick ratio where we can factor out the effects of the inventory. When we think about the current ratio and quick ratio, basically the idea is those ratio is whether the firm has enough and it is most liquid assets to satisfy the obligation they are gonna come due in the next year. But with the current cash debt coverage ratio, we are instead looking in whether the firm generates enough cash for its operation, not its existing assets, but the current operation, do they generate enough cash to satisfy those obligations? It's just a different way to looking at this idea of short-term liquidity. The equation to compute this current cash debt coverage ratio we are gonna have in the numerator instead of some kind of assets total from the balance sheets, but we are gonna have something from the statement of cash flows, and that is net cash provided by operating activities, or there is other name of it which is cash flow from operation. It will be worded various ways on the statement of cash flow, but it is the same thing. This is the main cash generated by the firm's core business operators, and the denominators we have current liabilities, and we can look at it in terms of average current liabilities when we take the current liabilities from January 1 and current liabilities from December 31 and divided by 2. And current cash debt coverage ratio is a liquidity ratio that measures the relationship between net cash provided by operating activities and the average current liabilities of the company. It indicates the ability of the business to pay its current liabilities from its operation. The net cash provided by operating activities is the net cash generated from its operation during a particular period. The average current liabilities are equal to opening liabilities plus closing liabilities divided by 2. A higher cash debt coverage ratio indicates a better liquidity position. For public Islamic bank, the bank is not able to pay all the current liabilities from the cash flow of its own operation, because both you have current cash debt coverage less than 1 or and even negative. Okay, thank you. That's all from me.
Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. My name is MUHMMAD Husaini bin HASHIM. My matric number 248526. Okay, today I want to conclude about public Islamic. Okay, public Islamic bank subsidiaries of public bank Berhad since 1993 offer Islamic banking product and service. Public Islamic bank focusing on all types of financing from consumer and retailing financing and also taking deposits. Okay, public Islamic bank offer full Sharia compliance banking solution to trust Muslim needs. after revenue on public Islamic bank financial system, we can know the position of bank in the financial status. Liquidity ratio can measure the bank ability to finance short-term obligation. The higher ratio against current liabilities, the greatest higher and higher capable of bank to pay short-term liabilities. Okay, current ratio is one of ratio that can be used for evaluate liquidity of bank. Then quick ratio helps to find how far bank can pay current liabilities using current asset, exclude most liquid assets. Okay, that's all for me.